Now that we have learned how to find levels where prices will find resistance or support and trends will terminate, next we will learn how to find targets for wave 5 and targets after ABC correction is complete. When trading for wave 5, when we are looking to catch wave 5, best suitable target is 127% extension on of wave 4. When entering a termination of ABC correction, best target is 127% extension of ABC correction. Stop loss is to be kept at extreme point of swing high or low depending on entry, and stop loss can be revised at swing low or oscillator reversals. One of the next most important point to learn and to incorporate in any trading method is trailing stops and protecting any profit that are made. One of the best way to trade is using trailing stop to protect any profit made after entry. Stop loss can be trailed on 1 bar basis or tighten your stop loss when oscillator reaches extreme zone. Instead of booking profit at 127%, one can tighten stop loss to 1 bar low or high to take advantage of any large move. You will have to choose one method that suits your temper and stick to it. Either you can use a 1 bar low trailing stop, or you can use oscillator crossover trailing stop, or you can try to tighten your stop once oscillator reaches an extreme zone after you make an entry. No matter what profit booking and profit protecting method you use, it is important that you never let your profits turn into losses. So once you enter into a trade and you see the position moving into your favor, it is very important that you protect your profits, that you revise your stops to protect your profits or limit your losses. So we are back to our Bank of Baroda chart, and as of the last bar, a sell short entry is made into the trade, and since it is an ABC correction that we are trading, profit target for this correction is 127% of the correction. So 593 is the target for this current trade, with a stop at a level of 760. Once an entry is made and a stop loss is placed, the next and most important level to understand. So once an entry is made and stop loss is placed, next comes managing your trade. There are a few things you can do here to trail your stops every time there is a swing low, every time there is a swing high. Next one is not to touch your stops until prices make a new low, and third one could be to trail your stops when momentum oscillator reaches over sold zone. Nonetheless, whatever method you use, it is important that you never let your profits run into losses. So for our current purpose, what I'll do is every time there is a swing high made, I will revise my stops to a swing high, and once prices make new low, I'll tighten my stop to 1 bar high. Alright, let's go and add some bars. You can see this is a swing high that is higher than its previous high, that is surrounded by lower highs. So I could have protected my stop to this level. Then this one is a swing high that is higher than its surrounding highs. So revise stop to this place and add some more bars. One more swing high here. I'll revise my stop to this place, and you can see oscillator reached oversold zone at this point. Nonetheless, I am determined to move my stops to swing high until prices make a new low. Once prices make a new low, I will tighten my stop to 1 bar high. So I have a clear trailing stop idea in my mind. So no matter what market does, I will use my methods. As of the last bar, prices broke down to a new low, so I'll revise my stop to 1 bar high from here, and as of the last bar, I'm stopped out here. On this day, I was stopped out at a level of 637. Never mind, I could never reach my target level, but even then, the risk to reward ratio on this trade was much better. You can see going ahead, target was met as well. Following is a Vadilal Industries weekly chart, and as of the last bar, you can see prices seems to be making a wave 4 swing low. Stochastic suggests prices have reached oversold zone. I'll plot extensions and ratios, wave 3 extension, wave 3 ratio, and wave 2 extension, giving me a tight price cluster of 190 to 175. So I'll delete these extensions and keep only ratios. Go ahead and add some bars to make this weekly. Add some bars, and as of this bar, you can see stochastic oscillator has given a bullish crossover. Prices found support in the region of 190, that is 50% of wave 3. So we make a long trade at 120, 220. I'm sorry. Let's clear these extensions and ratios out with a stop at swing low, which is at 195. Target for wave 5 is 127 of wave 4. Okay. So how do I manage this trade? I have made my entry, I have kept my stop loss. Now I need to manage the trade. The idea is simple. Since this is a weekly chart and there are not much bars for wave 4 low, so I will use a trailing 1 bar stop once prices make a new high. Once prices hit 127%, I will either take my trade out at 127 or I will continue to use 1 bar stop low method. Let's add some bars. Prices made a new high. At the same time, prices hit the level of 127. If I was using 1 bar low trailing stop, I'm still in the trade, or I could have taken my profit out at 127%. Let's assume that we are using 1 bar low stop and add some bars. So as of this bar low, we could be stopped out at 269. So we made an entry at 220 with a stop at 195 and made an exit at 269. So trading Elliott wave, the idea is quite simple. Choose which wave you wish to trade. One is to trade end of wave 4 and another is to trade end of correction of ABC. No matter which wave you have chosen to trade, use Fibonacci extension and ratios to plot a tight price range where wave might terminate. Use stochastic oscillator to judge the momentum and make an entry on momentum crossover. So that brings us to last part of our tutorial, that is putting it all together. In order to successfully trade Elliott wave, you need to 1. Identify Elliott wave structure. 2. Identify levels where wave will terminate, an entry can be made, and where to place a stop loss. 3. Identify levels where profits should be booked or stops should be tightened. And 4. Use trailing stops to protect any profits that you made. So even if you learn to identify Elliott wave structures, it is very important that you make or build it around a sound trading system that has sound entry rules, sound stop loss rules, sound trailing stop rules, and sound profit booking rules. No matter how well you are versed with Elliott wave or how better you get on identifying the waves, without a proper trading method, you won't be able to take 100% advantage of your knowledge. Hence, it is important to use Elliott wave structure with other instruments of identifying level of termination and entry and exit rules. So that concludes our tutorial of practical trading of Elliott wave structures.